Good morning and welcome to Join the Dots. Now I'm not going to tell you the day that this will come out because I'm not sure, because Craig is very busy this weekend and he's the only one who can do the editing. But what I wanted to do was recap the week because it was a big week last week and for so many reasons that you're not going to know and that you may have seen. Okay, so we'll start with Jake Claver because I promised you, oh, here comes Fugly. I promised you a story from Jake Claver or a piece from Jake Claver. And I'm going to link that as link number 1, okay? I would, if you want to understand XRP and its journey, understand that word. So many people are just spivs, traders, gamblers, speculators. They come in at the end of a boom, they get out at the top, or rather they buy at the top, they get out at the bottom in fear because they don't think. And they don't go on an investment journey. They listen to the crowd, they listen to the noise, and then they get annoyed that they didn't get it right. I don't understand that. Well, I do, because it's just short-term thinking or thinking they know everything, and they know very little because they've got no patience, they've got no time to build their knowledge to understand an investment journey. Okay, so on that theme, I reckon 22 minutes is the part that if you're into XRP or if you're really someone who wants to really understand it, 22 minutes is a good point in this link to have a look at what Jake is saying and listen. Okay, from 22 minutes he talks about the math of XRP, the settlement through XRP, and it's a crisis bridge for everything. And that's the point, it's a bridge, okay? So it's not a Bitcoin, it's not a Ethereum, it's not anything else. It's going to be or it's likely to be, and therefore on a risk-reward basis it's very attractive, it's likely to be the bridge for everything in an everything crisis, which we're rapidly approaching now. So I'd say go to 22 minutes, and as he says, generational wealth requires patience. I see so little patience out there in this world. And I see it in my comments from the shills and the idiots who are locked into a thought process and cannot open it up. They have one thought and they cannot open it up to debate, not speculation, but to thinking about other things that might affect their thought. No, they have their thought and that's all they'll listen to, and so therefore they go on to bias confirmation pieces all over the internet and never actually learn anything because they haven't got the patience. Okay, you need to have patience to build generational wealth. And I've shown that I've shown it over my 5 years when I've been building gold. But other people now are coming into this journey later on and they're wondering, are they too late? I don't think so. Anyway, XRP. Have a look at that. The bottom line of this particular piece is Jake thinks that XRP today is Bitcoin in 2013 when it was around $600. So it grew pretty fast, didn't it? Okay, so he thinks we're in the calm before the storm and this is the time to accumulate. It's never the time to accumulate after a mad rush. You know, when it stormed up last November from, 50 cents I bought at and it went to $3.30. That was the wrong time to buy, and yet that's the time when the public suddenly decide, I need to buy. No, you've missed it. Wait, let it calm. Come again. What the institutions are doing now is they're all buying. They're all buying, but they're buying selectively. They don't need to rush in. They don't need to force the price up. They just keep taking more and more XRP out of the system, quietly, discreetly. And then when they want to make the rise, they'll make it happen because they can. Okay, AI bubble. Well, what a good week that was, wasn't it? Again, same story. No patience, no thought, speculation. Anyone who was geared, say, I don't know, even 5 times plus in Palantir or Nvidia, they're out. They're wiped out this week. Palantir down 13%, Nvidia down just under 10% at 9.59. FT article, I will link it so you can see that. 800 billion wiped off stock market. Yes, okay, it's gone up before. And we know that. It was down at 5,000 when the tariffs came out in April. It's now 6,700. Okay? but it can be 5,000 again, very easily, and I think it will. Okay. WEF chief came out, the new chief. Now, I haven't got a feel for his ideology yet, because clearly it was a totally evil ideology that existed under Klaus Schwab. I don't know this new guy, so I can't really comment yet. He sees three bubbles: AI, crypto, debt. Well, I agree with all three, but that doesn't mean that some parts of all three can't do well. You have to do your homework. You have to be patient, and you have to research. You don't just get an answer on YouTube, throw all your money at it, and then see it disappear. Okay, so then we come on to gold. Okay, now this is link 3, and it's a very good piece. It's talking about India, and if there's a country that's got patience and has built up gold slowly and surely, India's your market. And it's a good link, so I'll link that. Part 3, a very sensible piece, says patience. Here we go again. Patience required to build generational wealth. There's the words again. Same words. Okay. Change in perceptions. And again, that's what we're seeing, aren't we? We're seeing a change in perception to everything. To the debt bubble. It was fun while it lasted, but now we're seeing it as dangerous. Crypto, Bitcoin, it was fun while it lasted. It's 120,000 now. Where's its future? And I keep saying that. Where's its future? I don't see one. I honestly don't. And I see it being outlawed because it's basically not conforming to any system and is outside the system, and therefore can be attacked so easily. Any politician can attack Bitcoin so easily. Okay? The history is there. So, AI, again, change in perceptions. We're going through that change. From greed, speculation, future, prospects, to, oh dear, have we gone too far? And as I've explained over the last 2 or 3 days, 8 companies moving $1 trillion maybe in contracts, all around the circle, simply fooling everyone. We'll see how the auditors react when it comes to actually recognising revenue. I think we'll be in a position then when the world is very, very unstable, and therefore the auditors can't go along like a boom. In fact, they have to say, sorry, grey is black, not grey is white, and we don't care. Okay, so on the gold one, the government is calling for a national gold policy. Now, this is going to happen across the world, I think. And it's already happened in some countries, but we're going to see national gold policies. The central banks, and some of them haven't got much, have they? UK is a great example. In terms of reserves, the US and Germany now have more than 75% of their reserves valued in gold because of the gold they held and obviously the price rise. So that's the sort of numbers that other countries might be looking to achieve. They've got a long way to go. They've got a lot of gold to buy. Okay? So in this piece, it goes to 10 to 20% of the gold holdings advised. And I like that. That's a balance. Okay, so conservative investors should have 5 to 10%. Balanced investors should have 10 to 15. And the high net worths individuals should have 15 to 20. Now that ties in perfect, doesn't it? Morgan Stanley 60, 20, 20. JPMorgan 20%. Warren Buffett 10 to 20%. Ray Dalio 15%. We're all coming to 10 to 20% as sensible and conservative. How much have you got? Ask yourself, how much have you got? Have you got that 10 to 20%? That's the change in perception that's coming. That is going to be conservative investing, 10 to 20% in gold. And all the institutions are shouting it, all the investment banks are shouting it. So it's coming. Okay. What's the last link for? Oh, link 4 is a piece on monetary debasement trade. And I forget who actually talked about this, but you'll pick it up in link 4. 3 elements: demand, fear, speculation. Okay? Demand, fear, and speculation. Now that's what gold meets, doesn't it? It meets the demand, it covers fear, and it also allows for some speculation. It's got a long way to go. AI has got a long way to go in the opposite direction. And crypto is going to have various moves, some down because they're overvalued already, and some up because they're necessary. As I explained the other day, I see XRP, like Claver sees it, as a protocol. Imagine if you had WhatsApp and you were charging a penny or 5p or 10p a message. Imagine what it's worth. And you have to have WhatsApp to make those messages work, don't you? Yes, there are alternatives, but what's the majority one? Now, if XRP fulfills that role in bridging currencies, especially as we go through colossal global crisis, this is the point. But you need you need foresight, you need insight, you need to listen to lots of things rather than just one focused thought that you already have anyway, so all you're looking for is confirmation bias. And I think that's the downfall of YouTube. Everyone listens to what they want to listen to and just goes away feeling, yes, I'm right. No. You have to learn, you have to think, you have to use patience, you have to counter your thoughts. I've done that throughout my time in all these things. And that's why I end up very certain on some things. Go to my vaccination video, because you really need to see some of the additional links I put on there recently. They're coming out. Like it or not, you have to face it. And like it or not, you have to deal with it. Okay? And that's the same with the financial world. We have to deal with what we see and what we feel is coming, not what we want to come. That is not going to do you any good at all, I'm afraid. So here are three things: AI, XRP, gold, three critical areas. All right? And you may see this Sunday, you may see it Monday, but I'll be back as soon as I've got some more information for you, and I'll be back daily through next week. Okay? Thank you very much.